Gold is a highlight of a lot of people at the moment. It's on a lot of people's watch lists. A lot of people are interested on what gold is doing, where it could go. And yeah, what's the general outlook for gold, really? So what I'm going to do is I'm going to break down gold, what I see on it, and what I expect to happen. I sent a gold signal to the Discord right here. You can see the entry at 2477. Now, since then, we've trailed our stop to break even, but this entry was taken off this level of resistance. And when we drew the fib from low to high, this level of resistance was also perfectly lined up with this fib golden zone, as you will. So it's the 0.5 level to this 0.618 level. Now, I trade the fib level quite heavily. It's a big part of my strategy. So when I saw this, almost like, it was essentially a perfect setup. We had the break and retest. So I entered off here. However, this wasn't just a trade based on, a break and retest and the technical patterns. So if we go here and look at the COT positioning, so the COT reports, now this tells us where the institutions are looking, or leveraged funds. So when we take a look at what they're doing, they are buying gold at a heavy rate. So, 84.69% is long. We've got 15.3% short. Now, when we compare this with, silver, oil, pound, dollar, Nikkei, platinum, etc., gold is the most bought asset within the COT report, which is, that's quite serious. It's not something we should take lightly. So that's the first good signal we have. So this is the signal I sent to the Discord. I won't read all of this, but you can see there is some economics here along with the technicals. If you want access to profitable signals with professionally written trade ideas to back these trades up, and to learn real trading standards with technical analysis and geopolitical and macroeconomic education with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at elitetraders.io. Anyway, back to the video. However, literally within 5 to 10 minutes of me sending this signal, this report was published on investing.com. Now, there are a couple of reports here, so I send these to essentially keep members updated and make sure that they are aware of why we took the trade and to keep that confidence up. And it's not a case of we send a signal and we just leave it. We don't like doing that. We like to send updates and keep members involved and keep the updates flowing. So the first article here is by Citi. So that's Citibank. And I'm not going to read all of this, but there is a key part here I want to show you, which is here. So the analysts argue that this renewed interest in gold ETFs could drive prices to 3,000 per ounce by mid-2025. Supported by factors such as potential Fed cuts, increased US recession risks, and heightened market volatility. Now, the news that came out yesterday on the US has relieved some of the recession risks. It's put that risk from sort of here down to kind of here. I think my computer might be lagging a little bit. I'm not sure why that is, so I'm sorry if you guys are seeing a little bit of some choppiness here. So the next article is by UBS. Now, UBS, of course, is quite a major player here. Now, there's not, again, I'm not going to read this whole article, but all of the articles I'm about to show you are completely public. You can go and Google them and read them all for yourselves if you are interested. So here, dovish Fed expectations, UBS now forecasting 325 basis point cuts this year. The move lower in real rates and weaker US dollar have all been positive for the gold prices. However, the real main thing here is actually the first line. So gold prices reached record highs surpassing 2,500. Despite this, UBS analysts believe the gold market is not overvalued. Now, I'm going to move on to this overvalued bit in a second when we get back onto the charts, but this is quite key. Now, the next one here is by Alamos CEO, John McCluskey, affirmed that the gold precious metal is still in a very strong bull phase, underscoring the strategic opportunities that lie ahead for investors. So again, won't read this whole thing, but that's just one of the key parts of that. The last one is by TDS. Visible short positions remain near decade lows, and we can back this up with the COT data here. So that essentially tells us that the larger market participants are not looking to short. Their short interest or the short positions they want to get into are at decade lows, so they're not really interested in going short on gold. So let's move on to, let's cover the overvalued or the overvalued aspect that I just mentioned. So this was something I was a bit concerned about with gold. And the fact is that we are almost 30%. Let me redraw that here. So yeah, you can see almost 30% over the 200 weekly moving average, which is significant. You know, it is very, very far away, very deviated. And last time we got something like this was kind of around the COVID era back in 2020 when we were, you can see 29.12% above this 200 moving average. And then it took us 791 days to get back to the 200 moving average. Now, of course, this was driven by COVID. There's lots of fear in the markets, and eventually COVID sort of fizzled out and the markets came back to, quote unquote, normal. So it's obviously not the same situation because this move isn't driven by pandemic. This is more by central banks and some world tensions. So the reversion that I am expecting at some point might not come for, a year, 2 years. It might take a very long time to get back to this 200 moving average. So I'm not concerned about it too much, but it's definitely something I am keeping an eye on. So yeah, the fact of gold not being overvalued is interesting because, like you can see on the screen here, why are you buying at all-time highs? Well, I'm buying at all-time highs because all of the data for gold is still bullish. There is nothing necessarily to suggest that gold is bearish or should be bearish. So the only situation I see where we have a bearish gold is a very short-term profit-taking dip, like we saw here when we created all-time highs at 24.83. We saw price come up with a very strong amount of momentum and then very quickly sold off. And this was profit taking by larger market participants. And I was expecting something similar when we did break these all-time highs. And luckily, well, I say luckily, but it was all, it's the strategy. So it wasn't really luck. We take the fib from the low to the high. And yeah, we trade it from this resistance. So we did have we did have a dip here. However, the dip was not nearly as aggressive as we previously saw. So that leads me to think we might see some more profit taking. However, the other side of that is, as I said, it seems like the institutions are heavy into their buying at the moment rather than looking to take profits. And we can see that by the momentum. So as I said, we had a huge run to the upside, then a very aggressive move down, and we've just not seen the same thing. This was, relatively aggressive, but this wasn't anything like we saw previously. So here we have a move to the upside, we consolidate, we move slightly back down, which is a healthy pullback, we continue to the upside, pull back, and now it looks like we're continuing. Whereas previously what we saw was this really strong move with a very small retracement and then a continuation to the upside, and then this huge run to the downside. And it just doesn't look the same in terms of the market momentum. What this tells me is we are likely to break this high and create a new all-time high, possibly coming for a retest and a continuation. This is more what I'm looking for. And if we do see this, if we can see this break and a retest, I will scale in. Now, I have scaled into gold previously. I was in a long position from sort of here with a very tight stop and very low risk, and I was stopped out by roughly 1 to 2 pips. Which isn't a problem because, again, it was very low risk and it was more just a test to see if I can get into a longer position and sort of scale in, which didn't work that time. However, again, if we do see this break and retest, it'll be a very similar situation or very similar setup that I was looking at initially, which is very simple break and retest. I'd be quite happy to scale in and get into a secondary position. In terms of managing gold, as I said, I am looking for this 3,000 target. However, the first target I have is at 2,600. So my game plan for gold is to trail the stop loss and trail it underneath price. It's not quite ready to trail yet. If we get this break and retest, I will trail my stop underneath, sort of to here, roughly underneath this retest low. And then, yeah, we'll manage it from there. But in terms of, partials and things, taking partials is not in my plan at all, really. I do it very, 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 very rarely. And this is a situation where I would. So if we reach 2,600, I'll take some partials. I'll take maybe 15 to 20% of my profits off the table. And then the same again, if we get to 2,700, I might take another sort of 10 to 20%. And then I'll let the rest run. and that's just to, get some profits banked, trail the stop, and essentially then it's a profitable trade regardless of what happens. And then I'll leave maybe 50% of the trade eventually to run to 3,000 if we can get that. But yeah, it seems so far that everything for gold is playing out. The only sort of thing I have that could be a problem for gold is the dollar. Now, the dollar has had a huge run to the downside, and this was essentially pricing in 50 basis points of cuts or 100 basis point cuts for the rest of the year. So obviously that did help drive gold up. Now, if we don't see that come, this could quite easily start pushing the dollar back up. Because obviously if market participants are expecting something down here, and this is what drove the dollar down, and we actually get something that's sort of around here, this will of course affect the dollar. So if they're not happy with the result, or it's not what they were expecting, they will start closing some of their positions. And yeah, this could again drive the dollar a bit higher. It's something to keep an eye on. I'm more in the ballpark of 25 basis point cuts. Now, gold personally for me was actually a little bit of a hedge because I'm obviously dollar yen long and I am euro dollar short. So I am expecting some sort of pullback on the dollar. Now, whether it's to, back to sort of highs, I don't know. Of course, you can't really time things like that. However, I'm more generally speaking looking for this 50% pullback, and then potentially a continuation to the downside. So yeah, as I said, gold is quite a nice hedge for me at the moment, and it's one I'm hoping or looking to keep for a long, a longer period of time. Yeah, we will see. However, if we do see a profit-taking dip, or we see if we see the dollar start gaining short-term strength, I'm happy to get stopped out at break even, and then buy gold again at the next lows, whether it's sort of down here, or if we can come even lower down to this sort of level of support around here. Doesn't matter to me. I'll continue buying gold, but we do need to pay attention to next Friday's news because we've got NFP and we also have unemployment. So if we look here on Friday, we have hourly earnings, we have NFP, and we also have unemployment rate. Now, these two, so NFP and unemployment rate, are going to be absolutely key for the dollar. Now, the way I see NFP, this is the last topic I have, and then we'll end the video. So if you are still here, please just listen to this bit because it's quite important. The way I see NFP at the moment is, actually, that's interesting. The forecast is at 163. I didn't see a forecast earlier. However, look, moving on. So previously NFP was at 114, which was very low. That was awful. However, if we can see NFP come out at 120 to 130, that will signal to me personally, my opinion, will give us an aggressive Fed cut. That will be more signaling towards a 50 basis point cut, very aggressive. However, if NFP comes in at sort of 160, around that range of 160, that will signal to me that the Fed is more looking for a 25 basis point cut. And obviously, if we have a good NFP, we'll see a stronger dollar. An unemployment rate, again, if this is 4.3 or anything in the region of 4.3, so 4.4, 4.5, anything above will be shocking. That'll be really, really bad. Anything below, again, will be a good signal for a 25 basis point cut. So if these forecasts are right, if we can get 163 on NFP, or we can get 4.2 on unemployment, that would be quite a good sign of a stronger labor market. The labor market's not on this downtrend that it's been on for quite a while. And it will, fix that NFP anomaly we saw when we got 114. So yeah, that's kind of my approach on gold. I know this was quite a lot to digest, so thank you for sticking around if you have watched this long, and I hope I've brought you some value. If you want to join the Discord, links are in the description. Please like and subscribe. It helps out the channel. This channel is not monetized. It's not sponsored. I do this all for free, completely for free. So yeah, just like and subscribe. It would means a lot to me. So thank you for watching. I will talk to you later.